Non-budgetary control techniques. A variety of tools and techniques have been used to help the managers to control the activities in their organization. There are many traditional control techniques not connected with budgets, although some may be related to and used with budgetary controls. The most important of these are discussed here, like statistical data charts, personal observation, operational audits, break-even analysis, special reports, and balanced scorecard. For example, statistical data and charts are effective management control. The various statistical data and charts can be used in every organization. The statistical information of past and data intended for the future can be used for control. The tables, charts, and graphs are examples of statistical data in the form of ratios, diagrams, average, and percentage. Charts are preferred in many organizations as it is a self-explanatory, attractive, and meaningful. The next one is personal observation. It is one of the control processes. It is a direct tool of control. It is a time-consuming process, and the personal observation helps the managers for the subordinate character's attitude and skills to their job. The mistakes committed by the workers can be corrected by manager directly. This method also increases the sincerity of workers due to observation by their supervisors. The next one is operational audit. The audit is performed by the organization to ensure that its assets are properly safeguarded and its financial records are reliably kept. Because it concentrates on the operation of the organization, this process is also known as operational auditing. There are two types of audits, for example, internal audit and external audit. The internal audit is nothing but audit. It is a carefully examination of accounts, financial and other operations of the organization. In this internal audit, it has been done by an internal auditor who is an employee of the organization. He examines the objectives, policies, plans, procedures, use of authorities, appraisal policies, quality of management and performance of the management. The internal auditor finds the defects and recommends their corrections. The management is responsible to take the corrective action. The next one is external audit. It is a careful examination of accounts, financial statements, assets, liabilities used for completeness and accuracy. External audit is done by an external auditor who is accounting the personnel from an outside the organization. It is a major systematic against the fraud within the organization. The next one is break-even analysis. The break-even analysis is an analysis which is used to determine the point at which revenue received equals the cost associated with receiving the revenue. It involves a chart which represents the overall volume of sales necessary to cover the cost. The break-even analysis can be used both as an aid in decision making and as a control device. The break-even point is the point at which cost or expenses and revenue are equal. At this point, a business neither earns any profit nor suffers any loss. The break-even point is therefore also known as no profit, no loss or zero profit point. This chart helps in forecasting budget, cash requirement, planning financial needs, make or buy decision, etc. The next one is special reports. Executives can give special reports for certain projects of non-repetitive situations. Such reports can also be given on the progress and performance of individual departments. The prepared reports are submitted to the superiors and they can analyze to control the process. The next one is balanced scorecard. The balanced scorecard is a performance measurement tool that looks at four areas such as financial, customers, internal processes, and people, innovation, growth, assets. that contributes to the company's performance. The general perspective is mainly financial perspective, customer, internal process, and another one is a innovation and learning perspective.